Welcome back. You're watching Trade of the Week with me, Zinati Guma, and back with us for a QuanTechMental analysis on Mr. Price, Foshini, Truworths, Pepkor and Woolworths is Unum Capital's Loyiso Mpeta. Thank you so much for your time, Loyiso. So we're looking at the retailers today and particularly clothing. Of course, with Woolworths also having food in there. But we'll see how that has affected the company. But I mean, they've recently come out with quite robust trading updates lately. Most of those companies. And it's quite interesting because we've seen investors plow back into those stocks, as they see those stocks as quite cheap, quite undervalued. They were beaten down quite bad last year, most of them. So it's been very interesting to see how markets have reacted and come back from the general sell-off in SA Inc. So let's actually start off with an overview of how these counters have performed compared to the broader market from 2020.
Yeah, so I thought it was quite interesting to go back to 2020, especially with that March sell-off due to the COVID impact. It was almost like a reset in this industry in particular, and everything started from a low base. So it really makes sense to go back in time and also to look at them holistically, because literally over the last 2 weeks, all of them came out with trading updates. So I thought it was worthwhile to go back to 2020 and look at that performance within that bigger time frame. So what we have here is a clear outperformer, which is Truworths, which is up 61%, followed by Woolworths at 43%, JSE 29%. And what you can say or call the laggards have been Pepkor with a respectable 10%, but your real underperformers being Mr. Price with a negative 8% return, and the biggest underperformer being the Foshini Group with a negative 15% return. And when I look at the distribution of returns, there's really nothing out of the ordinary here. Textbook, bell-shaped curve, lots of observations in the small returns and losses with very, very thin tails, so nothing really out of the ordinary here. And when we look at it from a regression perspective, looking at the beta coefficients, we can see Mr. Price, the Foshini Group, and Truworths have a beta coefficient of 1 or just over 1, so pretty similar volatility to the market. But Pepkor and Woolworths have a beta coefficient of 0.8, so those two you can refer to as low beta stocks. But what's more relevant is when you look at the return correlation of each stock relative to the all-share index, ranging between 0.59 and 0.49, so all of them very, very low correlation to the broader market, so very, very good in terms of diversification. So I think that sort of paints a really clear picture on how this sector is very, very different to the broader market. And in fact, when you take a look at them, the broader market won't give you a clear picture on this sector. So it's really best to just look at this sector in isolation, but being conscious of what's happening in the broader economy.
All right. Well, let's move on to the technicals, starting off with Mr. Price. Of course, we did get a recap from you last year. So what is the technical picture looking like from then till now?
Yeah, so let's start with that recap we had last year. I think it was around November. And I had emphasized this very, very strong bear trend in Mr. Price, which was characterized by this sequence of lower lows and lower highs. And towards the end of the year, I started becoming a bit more bullish because I had seen this trend start to turn with this sequence of higher highs and the stock making a higher low. And I also emphasized that I'm seeing an inverse head and shoulders, which is a bullish reversal pattern. So what has happened since is we can see there has been another push up in the stock price, making a new higher high. So now we have this sequence of 3 higher highs here, as well as we have 2 higher lows. But when I look at it from an Elliott wave perspective, we have a very, very interesting pattern, which I will also take this time now to use it as the lesson of the day, which is a leading diagonal Elliott wave pattern. Now, what is a leading diagonal? A leading diagonal is a pattern that is found in the first wave of a 5-wave advance or in the A wave of a 3-wave advance. So it basically kicks off either a bullish move up or a bearish move down. And what characterizes the the leading diagonal and makes it different to the impulse is it also contains 5 waves, which you can see here. I've got 1 to 5. But the most important characteristic of it is the 4th wave terminates within the price range of the first wave. So what you have is a series of overlaps in the wave structure. So when you have this sequence of higher highs and higher lows, the price action overlaps.
Okay.
Whereas in an impulse, there is no overlap between the 4th wave and the first wave. And also when you put a trend line connecting the higher highs and a trend line connecting the higher lows, there tends to be a contraction.
Okay.
So there's a bit of a convergence between the trend lines. So that's how you identify the pattern. So what am I seeing now in Mr. Price is this leading diagonal, and I'm looking at this move up as the 5th wave to complete the higher degree wave 1. And what I'm forecasting in the short term is a 3-wave pullback for wave 2. But what's critical for this bullish outlook to remain valid is this wave 2 has to terminate above 123.25. And when we do get this, or if we do get this 3-wave pullback, more often than not, you will see that's when some market participants will start to panic and believe that the bearish trend is going to continue. And this is where a lot of what we call weak hands or weak traders and weak investors get shaken out of the market before we then see what could be a strong rally up for wave 3. So in the short term, what's a key for me is when we get this pullback, watch this level 123.25, but looking at this technical picture as well as some of the fundamentals which we'll touch on, I'm quite positive when it comes to Mr. Price from now and maybe in the short to medium term at least.
Quite interesting to see whether dumb money could decide to leave the room, leaving the smart money in there.
That's how it works. That's how the markets work.
All right. Well, let's go into Pepkor. Pepkor went into a bit of a bear market last year, and for me it was actually a little bit of a surprise, because you would think that in such an environment of the constrained consumers would find more value in Pepkor's offering as consumers are trading down. But that didn't seem to be the case, as we did see investors not really liking what the numbers that they were producing last year. So just take us through the technicals that you did see.
Yeah, so we also did a recap on Pepkor around October last year. And again, I emphasized this massive bear market from this all-time high back in November 2021. And I had said that it looks like a bottom could be in at 1330, which we have here. And I had looked at this rally as potentially the early stages of a much stronger advance. Now, that advance hasn't unfolded with the strength I had anticipated. But again, similar to Mr. Price, what I'm seeing is we have this high, we have this higher low, we've made another higher high and another higher low, but again, there's very clear overlap in the price action. So again, applying the wave principle, I'm looking at this advance as a leading diagonal, and with the stock also currently in the 5th wave of a higher degree, wave 1. So again, what am I forecasting in the short term? Another pullback in 3 waves for wave 2, but again, critical. 1330 has to hold, and then we should anticipate a strong move up for the 3rd wave. So pretty similar as what we saw in Mr. Price from a technical perspective.
Well, let's go into TFG, because in the overview that you did for us at the beginning, that was the biggest underperformer there. Quite interesting though, because usually this is one of the favorites. I mean, with its acquisitions, its diversity in offering, and also its local manufacturing capabilities, really putting it in investors' pockets. But what is the technical picture telling us?
I think from a technical perspective, this one is probably the best one. So we haven't touched on this one in a while. So the structure completely changed from the last time we looked at it. But again, just looking at it from this June 2021 peak, another very, very strong bear market, which seems to have found buyers from May last year. And when I look at this descent from an earlier wave perspective, I see a textbook ABC zigzag pattern with a sideways triangle for wave B, and concluded in an ending diagonal. So you see here we have an ending diagonal, which is the inverse of a leading diagonal. Whereas a leading diagonal is found in the beginning, the ending diagonal is found at the end of a sequence. So again, we have this high, higher low, higher high, higher low, but again, very clear overlap. So like the first two, I'm looking at this as a 5-wave leading diagonal. Currently in the 5th wave, again, higher degree wave 1. Same story, I'm anticipating a 3-wave pullback, but again, critical. This level at 81 Rand has to hold for this bullish outlook to remain valid, and then I'm forecasting further upside. So technically, Mr. Price, Pepkor, Foshini Group, textbook identical patterns that I'm seeing in those 3 counters.
Well, let's go on the other side of the spectrum. Also surprising me is Truworths, because I would have expected in these tight monetary conditions that consumers would find it hard to pay back credit. And we know obviously that Truworths has a very strong credit granting component there. But that hasn't been the case where we've seen pressure on Truworths, has it?
Yeah, no, Truworths really has been one of the major surprises over the last 2 years. And when we look at it technically, we can see a very, very strong rally from that March 2020 low. But it did have a prolonged period of consolidation between August 2021 and May 2023. With this very, very prolonged sideways consolidation, not really a bear market decline, but more of a sideways consolidation. Yeah. And then we had this very, very strong rally towards the end of the year. So what I'm seeing now is from that last coverage, the stock has continued to push up a bit, and there seems to be some support between this 67 Rand and 68 Rand price zone. But from my perspective, at current price levels, the stock does look to be a bit overextended. So if you really want to still buy into the stock, it would have to come down to your valuation of it. And if you feel that there's still more upside based on valuations, but from a technical perspective, I'm looking at it as probably a bit overextended, and I'm seeing more opportunities in the other ones than Truworths. But certainly from a technical perspective, there's no critical break in structure to say there's going to be a strong correction or a bear market. I'm just saying it's a bit overextended. So I'm not really seeing good buying opportunities at current levels.
Well, let's go into the hybrid retailer that of course includes food and clothing, Woolworths. There was a strong rally after the announcement of the sale of David Jones, of course, something that they had struggled with for a while there in Australia. But then it seemed that there was a bit of volatility after that. And it doesn't seem like, for example, with the clothing side that it's doing as well as the other retailers, seeming that food might actually be the thing that is boosting the counter. How is Woolworths faring technically?
So quite interesting, and also taking into account what they reported in this latest trading update. Again, looking at what's happening in Australasia, where they say consumer confidence is arguably at the lowest level on record. It will actually tie in with my technical view as to what I'm seeing on the chart. So let's just go back to March 2020, very strong rally up, brief consolidation period in this contracting triangle, strong rally up to 80 Rand 47, followed by a pretty strong sell-off, but another strong rally to 81 Rand 13. And now we're currently seeing another strong sell-off as well, and some sideways consolidation. But here's something that's key here is you had this peak at 80 Rand 47, followed by this peak at 81 Rand 13. Now, I'm going to be a bit, or I'll get a bit ahead of myself and say, this looks like a double top.
Okay.
It looks like a double top. It hasn't been confirmed as a double top. The only confirmation we will get is a strong break below 58.24. But when you read the latest trading update, it does look toppish, this chart. The sentiment around Woolworths, exactly as you just said, is it looks like the food is carrying the rest of the business. And when you look at it from this perspective as well, it does look toppish. So I'm a bit neutral when it comes to Woolworths, especially when you look at where the stock is currently trading. It's trading slam bang in the middle of this trading range of this double top. So there's still potential downside back to 58.24, which is then now the support level, which for me would be a much better buying level than where the stock currently is. So I'm in a bit of a neutral state when it comes
you're
to...
on the fence.
Yeah, when it comes to Woolworths. It does look toppish.
Yeah.
It does look toppish.
It's quite interesting also to see the how these counters are performing in the offshore operations. As you said, with Woolworths, of course, they have said that in Australia and New Zealand, they have the lowest consumer confidence. Also, savings are even lower than they were during the global financial crisis. And then you have Truworths coming in, and Africa didn't do quite well, but Office in the UK actually did better.
Yeah.
So it's quite interesting to see the different performances there. On a macro point of view, and of course they've also had in South Africa the same issues and challenges, these retailers. What are you making of their trajectory going forward, and also just how they're navigating the challenges in South Africa?
It's quite interesting because we know load shedding has been persistent for a very long time. And these latest updates really covered the last quarter of last year, not a financial year, but just of the last year, which coincided with the holiday period. That is your festive season, also coincided Black Friday.
Yeah.
And you will notice as well that some have got full backup power capacity and others don't. So they had very different experiences in terms of their trading performance during that critical period. So that is one thing that, as an investor, you need to look at is what investment has been done in terms of that backup power capability, and also at what cost. You know, you can have this backup power, but we've seen it can be very costly. So is it really worth having versus not having? So that is one of the major issues, the load shedding, which is to persist.
And which affects the margins as well.
Which affect the margins as well.
Yeah.
But also, I mean, we're still in a very, very high interest rate environment, which has a knock-on effect on disposable income, which has a knock-on effect on discretionary spending. So that also affects the consumer as well, and consumer confidence. Likewise, the issues with the ports playing havoc with regards to their inventory levels. So there's quite a lot that's happening in the macro picture, but the question is, can it get any worse? And if you don't feel that it can get any worse, then it bodes well for the industry. I mean,
and that was really the ports situation was a common one. But also what was interesting is that TFG said that their local manufacturing capabilities actually offset some of those challenges. So assuming that they could do better there. But of course, we will continue to keep a close eye on those trading updates as the year goes by and as we see what the interest rate trajectory looks like. Thank you so much for your time and for your insights today, Loyiso. That was Unum Capital's Loyiso Mpeta.